back for more technical advice. But for the moment, we have a very important guest joining us. Sanjiv Bajaj, Managing Director of Bajaj Finserv, joins us now. Well, part of the group also, of course, is Bajaj Finance, which has been a multi-bagger for about 3-4 years now. Sanjiv, good morning, and thank you very much for joining us. Let me start with that one question I didn't ask you last time, and I think where the market just cannot stop, guessing. What's between you and Alliance? Are you going to buy out anytime soon, the Alliance Group?
Lata, your guess is as good as mine. So
no, your guess is better.
Well, when my guess gets better, then a decision will be taken. But there is no change from the last time that we have discussed. They continue to be partners. We continue to build two high-quality businesses. So there's no change right now.
Okay. What will be the catalyst for this decision? Will it be when you want money? Will it be when Alliance will be tired of waiting? Should we expect any change in ownership, say, in FY18?
So that's speculative, Lata, and it's not something that I have a clear answer for at this stage. The only thing that I can say is, as of now, they are partners. As of now, we are building the businesses together. Whether these things change, whether they change in FY18 or later, this would be speculative, and I don't have information to share there. But when I do get it, we will share it with everyone.
Oh yes, we trust you would share it with us first whenever you get the information. Sanjiv, hi, good morning. The last time we spoke to you, you indicated that post-demonetization, normalcy in the industry could return by the end of March. The only space where we're not seeing any major recovery is the SME sector, purely because it was more cash-driven than others. What is your own anecdotal evidence suggesting in terms of where you're seeing recovery now and where there's still some time to go?
Surya, with the SME sector, we actually saw things being reasonably slow even prior to demonetization from the early part of the year. So there were certain cities and segments where we started seeing our defaults, our bounces on payments go up marginally. And as a result, from the first quarter itself, we tightened our credit policies. So the bottom 20-25% of people who we would have normally given a loan to, we cut that out. And that's why for us the impact in Q3 was not as much because we had already started taking that action. We continue to, I would say, see slow growth over there, and it will be important to see over the next 2 or 3 quarters how these SMEs adjust to the fact that there is still less cash in the system. There is a lot of pressure, correctly so, but there is pressure on them to move towards more formal methods of payment. And you have to keep in mind that it's not only the individual desire of that SME, his chain works on cash. So we think that it still takes them a couple of quarters. There could be delayed payments. Towards that end, we have made slightly higher provisioning on our SME book just to be on the safe side. So this is something which I would wait till Q2 of the next financial year. On the other hand, our consumer side, where very clearly, other than the motorcycle sales, where we cater to a large number of lower income people, so that still continues to be slow, and hence the financing continues to be slow. But our other segments are now inching up in January, and that's where we have greater confidence to say that by March, the consumer financing should really come back at speed.
Okay. Sanjiv, good morning. So for consumer finance in particular, is the latent demand strong enough to compensate for the 1 or 2 month hit that you would have taken? Is that the sense you get looking at the last few days' numbers?
Anuj, if you look at actually consumer durable sales, and if you expand that to other categories, sales have not gone up significantly. So sales are still muted, and actually sales the last couple of years have been muted. First half of this year actually grew 6-7% for consumer durables, if I have my numbers right, after a couple of years. And that has not improved. For us, our diversified lending strategy, where we are financing across multiple categories, not just consumer durables, but we're doing fitness equipment, we're doing watches, in case you want to buy one. We're doing, for example, now groceries at Big Bazaar. We are doing T-shirts at US Polo or Benetton. So we have expanded the categories, and this is allowing us to keep our growth. So it's not that the underlying segments are growing as much. We are growing because we've expanded our categories, knowing that we'll otherwise get to saturation very soon.
You know, I wear a 2,000 rupee watch, so don't need finance for that. Sanjiv,
You
but
don't
thanks
need
a
for
lot.
that, I agree. No, I mean, I have a few more questions for you on this financing, but allow me to come back just for a little bit to that Alliance issue. No question of Alliance buying more stake, because I thought they had a right of first refusal, and with the FDI rules allowing more foreign stake in insurance, did they have ever a right to buy your stake?
So that's a question that's again under debate, because that was subject to 1, 2, 3, 4 things. And as I said, there are multiple discussions that have happened between them and us on this, so I can't comment beyond that, Lata. As I said, those discussions have not been conclusive so far. They're happening in a very cordial manner, I must say that, because they could stay on, they could exit. So this is really something that two partners have to take a call on, and that's why I think it's best that we keep it as it is till we really know something firm.
No, I'm not saying that they will kill the goose that lays golden eggs, but you know,
No, they can't. They can't, and they've been very strong, very fair partners for 15 years. So there's no worry on any of those issues.
Okay, no, the regulators' rules were only on the pricing at which they will exit. I mean, they will get the stake or they will exit. But there are no regulatory rules on preventing them from staking a claim that as and when the rules change, we will get a stake. Was that part of the agreement?
So as I said, I can't get into more at this stage on that because there are discussions going on.
Fair enough.
Okay, you know, coming back to the spending patterns, etc., almost 70% of your lending portfolio is to the salaried class. I wanted to understand from you what the recovery is over there, both in terms of discretionary spending as well as, you know, I mean, you were talking about the new segments that you're getting into. Have you seen any major recovery there, or is it more to do with, you know, just specific verticals like motor financing, etc.?
Other than the two-wheeler financing, we are seeing our numbers come up by and large close to normal, and that's where I hope that by March we'll be at normal levels. So when we look at our consumer durable financing is coming back up to speed. Our, if I look at the expanded category, the personal loans that we do to salaried customers, home loans, all are coming back. But I would not say they are at the same level at where we would expect them to be here. Now, what you have to keep in mind is we are still growing. So month on month, you're still overall seeing growth. So it's a question of where you expect us to grow to. For example, if you look at our PAT in Bajaj Finance, first half of the year grew at 45%. Q3 was 36%. Now, 36% is a great number, but it's not 45%. So it means there has been some slowdown. I'm hoping that by March, this part will at least come back to normal. But, you know, we have to just wait and watch because everything is not in our control.